Hello and welcome to another update video about Ethereum. This is just a quick middle of the day update because Ethereum is still moving in a corrective fashion in this ascending wedge or price channel. The trend line seems to be relevant. The price does respect the trend line. We haven't broken out yet. We're still following this pattern. It's a so-called ascending wedge pattern. That's a pattern that would in most cases break to the downside because it indicates exhaustion. You can see that on the way up, there is no party clearly winning. There are many buyers, there are many sellers, there are many buyers, and most recently here the selling pressure has increased again and the buying pressure is now very weak. So we are moving here and we're trolling support or the trend line in that ascending wedge pattern. And we are still, as you know, we are waiting for another drop. Now that drop might not happen, as I said, but as long as we are still in resistance or below resistance of 1865, that's here the golden ratio, 61.8 retracement level at 1865. As long as we stay below that level, and as long as the movement to the upside is clearly corrective, I will assume we get another low. But Elliott Wave is very good at telling us when we have to change our view. So that would be at least above 1865, we need to consider it. Above 1889, it will get a bit clearer that we have to change our view. Because we hit the trend reversal area already here, which is that 50% retracement level here of 1754. That was reached already and broken twice on the 12th of May, touched it twice and reacted to it. But the movement to the upside is just too weak to really say, okay, you know, this is the low is in. Also, one more wave is actually missing to create a nice ABC structure. So the likelihood really is that we get one more low. And if we get one more low, we need to look at something around that golden ratio target here, the 1663 level. Why is that? Well, let's take a look. We looked at that before, but if we take the length of waves 1 through 3 in that C wave and we go to the latest high, then the 61.8 extension, which is a clear target for a fifth wave, it's a common target, points pretty much to where that golden ratio is sitting at 1663. So there is a good overlap there. And then we had a few more other, Fibonacci extension targets point towards that level. So from that point of view, that's important. And then we had that previous swing low here as well, around the 16th of March in that price region. So from that point of view, it just needs a bit of patience. It's again a boring sideways action, but a wave 4 is boring. Ideally, we already topped here in the fourth wave and we're now coming down. We can go with that assumption as long as we're holding yesterday's high here at 1847. The small problem we have is that the move to the downside isn't clearly impulsive. But as I said, because the move to the upside over the weekend has also not been impulsive and is rather corrective. And because we are below resistance, the assumption has to be we haven't broken resistance, and we come further down and follow that pattern further to the downside until it's complete. Yeah, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.